Hi guys, logging in here, Nellie with Keller Williams Realty. I wanted to talk about a topic that a lot of people really don't think about. 7 things that you should not do while you are in the market to purchase your new home. Number one is change jobs. Change jobs, quit your jobs. You should not do that, and the only reason being is because that creates a different dynamic for the bank, and you might not be able to purchase a home even though you originally got pre-approved for a home to purchase. And that's the unfortunate part. A lot of people, what they do, they don't realize it because they're already in contract. They have a closing schedule. They're like, okay, well, you know what? Now I can quit my job because I hate my job. The banks actually, up to the last minute, even at closing, they run the credit and they make sure everything is still okay and they have documents up to date before you actually sign on a dotted line. So to make sure that you are still able to purchase something, stay on your job even though you hate it until you actually get the keys to the property, and then quit. Number two is making a large sum of money, cash deposit into your bank account. All money has to be traceable, documented. So depositing money into the bank account is not a very wise decision. Obviously, also if you're getting a gift for your purchase, you should speak to your loan officer and see how they handle those situation, and basically follow their advice on how these things need to be deposited. As long as they're aware of it and you document it, it shouldn't be a problem. Number three, not to co-sign for anyone, because co-signing for anyone means you're taking on more debt onto yourself, and that changes the whole dynamic for some people. If you were able to purchase something, let's say for instance you're making whatever dollar amount and you got pre-approved for this loan. Now if you're adding a debt onto yourself, now your debt to income ratio changes, and you might not be able to close on the house that you fell in love with and you actually put an offer and got into a contract. So be very mindful, who you co-sign with, and let them know that you're actually in the process of purchasing something and you're unable to, co-sign for them. And as soon as you close on your deal, by all means, you can help them out and co-sign for them if you're still able to, of course. It all depends on your income if you could carry on 2 mortgages. So that's the other thing is. Number four is don't make large purchases, because large purchases, blah. Large purchases actually does impact your debt to income ratio and your ability to buy your home. So as long as again, there's has to be a huge line of communication with your loan officer to ensure that before you even purchase anything, that you need to communicate with them and let them know, hey, I want to purchase something. Is that going to hinder my ability to buy this home? So if you don't have no debt, which most of us have tons of debts. So if you don't have a debt and you want to purchase a furniture, if your loan officer says it's okay, then have at it. If not, my safe bet is not to do it and wait until you have the keys in your hands to be able to do that. Then the number 5 bulletin is not to open a card. Cards, opening cards can hinder your line of credit, your debt to income ratio, all of that. So not to open a line of credit, because any of that, inquiry on your credit can impact by points, obviously, can impact your credit score. It all depends where your credit score is. I would definitely always speak to your loan officer, speak to your real estate broker, and seek their advice before doing anything of that nature. And then number 6 would be not to close any of the accounts, because closing an account actually impacts your credit score negative. Believe it or not, it impacts you negatively. So don't close any accounts because you know what, you're not using this card, so you don't really need it. So I'm gonna go ahead and close it. No, wait until closing. Once you get the keys, you can then go ahead and close the account. Until then, don't close any accounts because that does impact your credit negatively. And then lastly, number 7, not to open and close any of the accounts, bank accounts. So while you know you might not like, I don't know, any of the banks, and you decided, you know what, I don't like that bank anymore, I want to go open a different account. Wait until closing. Any bottom line is any inquiry, financial inquiry or credit inquiry, does impact your financial ability. So speak to your loan officer before you do any of that, you know, those decisions, because that might impact you negatively. Now, it depends on where you are, obviously, with your credit score, with your income. Some can't afford have inquiries because, you know, they make enough money to cover that, the mortgage plus whatever expense they're taking on, as long as it's all documented. I hope you found this helpful. If you have more questions that you want, you know, a response or an answer, please comment down below. I will definitely can talk about this, and I hope you found this educational. If you did, please like like my video. This is my first video, very educational video about this topic. You know, again, my name is Nellie with Keller Williams Realty. Have a wonderful day. Bye-bye.